understood money and trading, and that's kind of what we're going to talk about in a minute. My ideas on how you handle the money in a smart way, in a professional way, and in a way that you can earn a living from this money, which is different. You know, if we're all hobbyist traders, which you're in Chicago, I'm assuming that you're all earning your living trading. But you know, a hobbyist trader, there's somebody that they make a little bit of money, they lose a little bit of money, then they make a little, then they lose some more, and by the time it's over, they probably have lost money or not made anything, but the money isn't actually that important. They're having fun trading, I guess. But the trading that I've always done, and I'll bet the trading that you're doing, is professional trading. You have to pay Citicorp out of this money. You have to pay your rent, whatever it is. And so it's different. Because it's my experience, as I mentioned Citicorp, that if you give them money, you can't call them back the next day and say, you know, I had a really terrible day, could I have my money back? You know, there's no place on their checkbox that says send the money back because he had a bad day. They're not much interested in hearing that. So you have to take it seriously. And this is the way that we did it. We did it by the money was real. And as I said in the beginning, the money was real to us, but the fact is that today it's just an amount in a statement. So it isn't real. It isn't as real as it should be. So we're going to talk about some ways of making it real, how you can make the money, real. So that's how we get started. I should tell you, just as an aside, that has anybody worked for a brokerage firm here? Okay, same people. Okay, there we are. If anybody worked for a brokerage firm that had locals on the floor, okay, did you have a safe that had money in it? Do you know?
I wouldn't know.
Okay, all the brokerage firms here that do business with locals on the floor have these safes that have money in them. And it's like not small money. It's like when Rand, I guess I can say this now because I've been away from it long enough, you know, we had a safe that had like $20,000 or $30,000 in it in hundreds. And we had a guy that went to the bank with a briefcase that filled it with hundreds. It was like out of a movie. If anybody, well, you're shaking your head because you know exactly that, right? It was like out of a movie. If anybody had any, you know, if anybody had any desire to do so, what you do is you'd be standing at the bank and there'd be a guy open up a briefcase and fill it up with cash, and then he'd walk out. And to my knowledge, nothing bad ever happened with that, but it could have. And it's just a different kind of a mindset of how things work. So in this environment, the money was real. If you made money in the day, you got to take it out. If you lost money, you had to put it back. So it made your discipline absolute because you understood how it worked. So let's talk about how we're going to do that today. So as a professional trader, what do you need to do? First, I believe you need to decide on the amount of capital you're willing to commit to trading. Now here I'm talking about trading capital. I'm not talking about capital in your brokerage account only. We'll talk about that in a second. So first we decide on the amount of capital we want to commit to trading. Next, my suggestion is we keep the minimum amount of money in the brokerage account necessary to trade the way you want to trade. Now, I've had trading accounts that have been like my accounts in Kansas City that had $358 or something in it, to accounts that had several $100,000. I can tell you that if you have the larger amount, you're not as careful with your discipline. Because, you know, if you have $150,000 in your account or some figure that you would think would be a large amount, and you're in a trade, it's pretty easy to let it ride, isn't it? Because you know what, it isn't that big a deal. I mean, you lose another couple of hundred, it doesn't make any difference, really. And the trouble is with trading is your discipline needs to be absolute. You need to take it that seriously. And so, you need to have the minimum amount. That way, if you should be sloppy in your trading, you're going to know it right away. Now, when I say the minimum amount, I mean the minimum amount that the broker will allow you to trade. So in other words, to trade the way you want to trade. So I'm not talking about you put the minimum amount and you're always on the edge with the broker, but what I am saying is that you want to have the minimum amount to comfortably trade the way you want to trade, and also allowing you to, if it's appropriate, to add to your size if you're being rewarded. So we're going to keep the minimum amount necessary to do that in our brokerage account, and the rest of our trading capital can go in a bank account. And I would have it be a separate business. That's a whole other topic, but so that's how we're going to handle our brokerage account. The minimum amount necessary to trade the way we want to trade, and the balance, of course, in the bank. Now, let's talk about something that I think is vitally important. You need to take out profits on a pre-planned basis. Here's how we make the money real. In other words, if you have an account that is, you're already sort of behind the eight ball because this account, your money in the account is just sort of lines in a computer screen. It's not real, it doesn't seem real. And what most people do is they don't take the money out because they're just trying to let it grow or something. Well, My advice is not to do that, to always keep the money at a minimum amount in your brokerage account and take out profits on a pre-planned basis. And what I would do would be every month I would return my account to its beginning balance. So in other words, let's say you're trading a $100,000 account, and let's say you have $25,000 in your brokerage account. Okay, at the end of the month, if your account, literally I would do this, if it has $25,358, I would call up the broker and ask for $358, which returns it to $25,000 on the first day of the new month. Also, I would ask for a check every time I made some amount of money. Now, I'm not talking about it being a lot. I'd ask for a check every time I had made $1,000 or $2,000 or some number like that. Now, why are we doing that? We're doing that because we're making the money real. In other words, you're not just doing this supposedly making money to infinity. What you're doing is you're taking the money out. You're taking the money out and you're rewarding yourself for your good trading. So that rewards you for your skillful trading. It rewards you for being disciplined. It does these, what I think are incredibly important things. You're taking it out. Now let's talk about how a brokerage firm works. And for those of you who work for brokerage firms, tell me if I'm exaggerating by much. Now I may exaggerate by a little bit, and I'll be okay with that, but if I'm exaggerating by much. If you have a big brokerage firm, and let's say that they have in their margin cash department, if they have 20 people, would I be wrong to say that there are 3 or 4 people that are writing checks to people, and there are 16 or 17 people asking for money from customers? Is that about right? It isn't too far wrong. Yes, sir?
It depends if your firm is institutional or not.
Right, institutional would be different, but a firm that has a broad cross-section would typically have, I think, something like that. So in other words, they're happy. My point in telling this part of the story is that the broker's happy to write checks because in the brokerage firms, the big brokerage firms that I know of, the 17 people that are asking customers for money are busy as heck, and the people that are writing checks are sort of sitting around. So you want to, you'll be doing them a favor if you call them up and ask for $1,000. Don't worry about the small amount. Don't be embarrassed because it should be larger. The fact is that this is a business that you have, and you are harvesting money from the business that you've earned. So I'd be sure to do that. So once again, every time you get $1,000, every time you get $2,000, some number that you're actually, it's important that it be a number you're going to actually get. In other words, if you say, well, every time I get $10,000, I'm going to ask for money. Well, you know, if you don't make $10,000 a month, it's not going to be very often that you're going to get money. I would literally do it at $1,000. Actually, if it were me, and it was appropriate, I'd get it at $750 or $500 or something. It doesn't matter because really what we're doing is we're making the money real. And that's really what this is about. This is about making the money real, making our discipline absolute because the money's gone. You know, the money's out of there. And so that's how I'd handle profits. And I think if you take away one thing from this little session that we're having, if that's the one thing, I think you'll be doing just great. I'd be very careful of adding money if you're not being rewarded. So I'm not much for adding money to your account unless you're being rewarded. If you're not being rewarded, my suggestion is that you reduce the size, you go back to the simulator, you need to live with your money management risk rules. If the market's not rewarding you, you need to back up from this. And it's my belief, actually, that the market's designed to pay you money. And because the market's designed to pay you money, if it's not paying you money, something's wrong, and you need to be on the simulator. You need to be trading very